G'day folks, welcome back to Pete's Investing. This is the Bitcoin technical analysis, and just be mindful we've got a couple of divergences to look out for, so I'll go through those right now. So for those new to the channel, we've got the weekly, daily and hourly, and you can interchange any of these with your own time frames. So basically what here is the weekly. First off, you can notice on the CCI 400 we're still in an uptrend. On the CCI 150 that's tracking in line with the price, so there's no divergence. We use that primarily as a divergence indicator. You'll notice back here we had a bearish divergence versus the price, and it did actually fall off. So just be mindful of those divergences as we go forward. So pretty much a bullish movement on the weekly. On the daily, however, we do have a, again, the CCI 400, our trend indicator, is pretty much trending slightly bullish, but possibly I would call it neutral. The CCI 150 is starting to break to the downside, even though we're making new highs on the price. Now there is a bearish divergence here on the 150 versus the price, so we can effectively consider this still in play so long as the CCI 150 remains below those highs. And you can see here the price is making new highs. We're going to move that to there. So as long as the CCI 150 remains below those highs, we're going to consider this a bearish divergence, and as soon as we see it breaking below, that's where we're going to start targeting a pullback, and that pullback could be a crash, but it could also just be a minor pull to the downside, so we can't really tell at this stage. On the hourly, we've got here another divergence showing up, and that's showing a bearish divergence on the 150 versus higher highs on the price. You can see there the CCI 400 is pretty much roller coasting down and up, so that's probably not really relevant at the moment. This is the real indicator we should be following and observing. Again, so long as this CCI 150 remains below that high, we're going to consider this a bearish divergence. So again, just keep an eye on that. We may see it fall further. Now, as I said, the divergence can be just a bit of a pullback, a retrace before taking further upside, or it can be a complete reversal like it was back here. You can see there was a pretty massive decline on the price. So just be mindful of that as we move forward. I'd suggest it's probably going to be just a small pullback, most likely. I can't say exactly where it's going to stop, but if I was to project a target, and let's assuming it started turning down today, because that could still go higher. Let's pull it back to this low, to that high. Then we look at potential target areas. An initial target area would be somewhere between the 23% and the 38% level. Now that was still in play back there, that little rectangle. We're going to delete that. So that's our initial target area, assuming it starts pulling back today in a reversal and a divergence to play out for this little range here. Now it doesn't mean it's going to bounce from there. It could actually fall much lower, and if it falls much lower than the 61%, I'll draw another little indicator to say that that will be the next level to watch. If it breaks below that, then that'll be, again, you can bounce from any one of those Fibonacci levels, but if it breaks below the 61%, then we're going to see a reversal in a longer term, and that could be the start of the reversal we're looking at for on the daily. But at the very least, we're looking at that initial target area between the 23 and the 38% level. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in the next video.